Hey all, welcome to ShareTreck. This is Raj here, and it's the 8th of July 2022. It's a Friday, and therefore there's going to be options expiry, which is going to distort our view a little bit. Then we also have some economic data coming up next week. That's also going to cause the market to have a second thought. We also have the bank earnings coming up next week. So that's also going to cause a little bit of trepidations. So overall, is the economic data going to be good? We are looking at employment reports coming up. Is it going to show very strong labor market, or is it going to show a weak labor market? That would determine whether the Fed goes for a 75 basis point or a 50 basis point hike. So all those things are out there. Therefore, it's going to be a bit difficult today to sense the direction of the market. With that said, let's go and have a look at our initial outlook. Let's get started with some of the economic data that we were talking about in the intro. June job reports is not expected to show an economic slowdown or a recession looming. This is the street expectation. The economy is expected to have added 250,000 jobs in June, a strong number, though lower than 390,000 in May, according to economists surveyed by Dow Jones. Economists say the consumer price index inflation data next week will be the most important upcoming data for the Federal Reserve's rate hike decision, but jobs data will also be key. Overall, we are looking for a very solid jobs report. I think there's been some concerns about a slowdown in consumer spending and the housing sector, but that's not showing up yet in the labor market, said one economist. I'm thinking that given the strength of the dollar index, imports might have been much cheaper. That would have definitely led to a little bit of softening in the labor market. We'll see what happens when the reports come in. Our next heading is Japanese stocks give up most gains after report that former PM Shinzo Abe was short. So this is again a bearish trend for us. So he brought a good deal of stability, and he was internationally also well recognized. 10-year treasury yields are the next headline. 10-year treasury yields below 3% as traders look ahead to jobs data. So it here says the yield of the benchmark 10-year treasury lost 1 basis point to be about 2.9983%, while the yield of the 30-year treasury bond was slightly down at 3.1914. Yields move inversely to prices, and a basis point is equal to 0.001. Basically, whenever the yields move down, that means money has flooded into the treasury. So 10-year treasury is attracting more money, and therefore the price of the treasury is going up, and the yield being fixed, it becomes less in terms of the purchase price of the treasury. And the next headline I have here is that European stocks mixed on course for the positive week ahead of US payrolls. Stock markets in Europe are on course for a positive week after 2% bounce on Thursday, built on gains from the previous session. So basically they are saying whatever happens today, it looks like at the end of the week, European stocks will be positive. And the focus for global investors on Friday will turn stateside to the June employment report, which is expected to show another strong month of hiring. So everyone is looking at the jobs report. If the jobs report comes out weak, then we can expect the Fed to go slow with the interest rate hike, because it will signal the onset of recession. Then the next headline out here is India isn't likely to stop buying Russian oil anytime soon. And there are geopolitical reasons why, and in the channel I have spoken before. And at the same time, India has got domestic compulsions also. With inflation going up, we already see how Biden is having a lot of problem. So India needs to keep the oil price down, and it needs to keep the inflation down. And cheap Russian oil seems to be the best source. And that's the reason why India is continuing to buy oil from Russia. And also India is giving some support to Sri Lanka and trying to be a responsible partner in the Asian subcontinent. And as a result of which, US is very reluctant to put any pressure on India at this point of time. So given all these things, I think India is going to continue buying Russian oil as long as there is this inflation pressure mounting. There's another group of economists who have said that it's a good thing that India is buying Russian oil, because others are prevented from buying Russian oil. If India was also in the open market for looking for non-Russian oil, then the oil prices would go up even much higher. So in a way, it's a good thing that India is buying Russian oil. I agree with that point of view. And right now it is 7:38 a.m. It's rather early in the day, but we want to start recording early so that we can have it out before 9:30 and before the market open. Well, friends, let's start with the Nasdaq futures. Nasdaq futures are down minus 0.41%. So there's a bit of weakness seen out there. We have decisively crossed this diagonal line of resistance, and now it has become a support for us. Just going to drag this down here for future use. MACD is bullish and momentum is above average but slightly pointed downwards. And pre-market we are down minus 0.42%. So that seems to be a bearish indicator for us. If we look at XLY by XLP, we can see that we are all risk on at this point of time. And I think this trend indicates that Genomics and risk on shares are going to do slightly better. We'll have to see what happens for today. This is the candle for July 7th, and July 8th candle is yet to form out here. So as of yesterday, we were still risk on, and we can see that in the performance of Genomic shares. Next, I'm going to the indicators, and in the indicators, first stop is going to be oil. So oil has jumped back again on top of this diagonal line of resistance that we have put there. So now it has become a support, and I'm still expecting oil to travel down this line of support because global demand destruction has taken place, and that's going to result in less demand for oil, and therefore there's going to be a downward turn out here. MACD is still bearish but moving towards the signal line. Momentum is below average and slightly flat out here. So hopefully during the progress of the day, US oil goes down further. With that said, I'm going to be looking at the VIX, and the VIX, real-time VIX is showing that we are trying to negotiate this diagonal line of resistance, which was earlier support. I'm going to make this as a resistance. And if we cut above that, then we have got a resistance coming in from the 100-day exponential moving average, which is sitting at 26.72. Right now, we are at 26.31. And the next stop after that is going to be 27.20, which is going to be a very, very strong line of resistance because it's also aligned with our 9-day exponential moving average, which is sitting at 27.22. So all put together, it's a serious uphill climb for the VIX. So I'm expecting the VIX to stay flat or probably come down a little bit today. And if we look at our next indicator out here, it's going to be the it's going to be the US dollar index. And when I look at the US dollar index, there's a kind of a coiling effect happening out here. This small candle is the candle for today, and it's still within yesterday's range. So we have been range bound for the last 3 days. And with the weakness in the yen, with the weakness in the euro, and also briefly the British pound went up when Boris Johnson announced his resignation, but it has given up those gains. So I'm expecting the US dollar index to become stronger. And if you recollect, we are projecting that US dollar should go somewhere close to 13,070 at the peak. So it has to move a little bit upward, if not up to the maximum peak that we have predicted. So I think that US dollar index will go up. The MACD is also bullish. Momentum is also above average and pointed upward, and there's plenty of room before it becomes overbought. So if the US dollar index goes up, that could be because of other factors. And I don't think at this point of time it's going to make such big impact on Nasdaq. With that said, I would like to go and look at put-call ratio, what it was like. Put-call ratio was in the bull territory as of yesterday. And today also, I think it's going to inch closer towards 1, which is going to be neutral because there's going to be indecision in the market today, given that we have economic data coming up tomorrow, next week, and we are going to have bank earnings coming up next week, as well as the weekend is going to be a time when people have to decide whether they're going to leave risk on the table or they're going to keep cash in hand to come back and start Monday afresh. Therefore, I think the put call ratio is likely to go somewhere closer to 1 or be somewhere in the neutral to in the neutral area. So let us see what happens when we take stock of it probably on Monday. Next, I'm going to look at the QQQ. The QQQ is looking really strong. It has gone above our line of resistance, which we had here. And that was at 292.96. Right now, we are 293.64 pre-market, down minus 0.45. So this line is definitely become a support. So I'm going to mark it as a support, and I hope that holds on for today. MACD is definitely bullish. Momentum is above average and pointing upwards. So that's a good sign. But the only negative is the bearish opening of the market. And as I mentioned, all the factors that are coming up next week, there's going to be a bit of indecision. So I expect a volatile day today. And with that said, let us look at S&P 500. Oh, let me go back to QQQ. I'm going to draw another trend line out here, linking some of these highs that we have had. And let us see if we can make some sense out there. So as you can see, we are at a critical resistance out here, which is pretty strong. And therefore, there's a good chance that we might push back from here. So there is two ways in which we can go. We could either cross this and go up, in which case we are going to have a problem out here, which is the 50-day exponential moving average. That's going to cause a problem for us out here. And then if we did move downwards, then we have the 20-day exponential moving average, which is coming somewhere about here, which is going to give some support because it's at the supporting stage right now. So it could go either way, depending on how the market participants perceive what's going to happen next week. So it's going to be a push and pull. Some people believing that next week we're going to get data that's going to bring the basis points increase on interest to 0.5%. That means they will be bullish. And people who believe that we are going to have a very strong jobs report and therefore Fed is going to go ahead with the 0.75 basis point hike, they will be a bit bearish. So both of these possibilities are there, and that's going to be weighing on the minds of participants today when they do the trades. And that's why I expect to have a doji candle at the end of the day when we look back at the price action for today. And that doji candle is likely to be a bit red. That's my opinion. Let's go to S&P 500. Again, in S&P 500 also, I could probably look at a trend line out here if I join them together and connecting the peaks of the earlier highs, and also the fact that it is in conjunction with the resistance, horizontal resistance here at 389.67. I would say that we have strong resistance out here. MACD is bullish. Momentum is just above average and pointed upwards. But pre-market, it's showing a bit of weakness. And this weakness is not much. It can always be overcome before market open. Remember, we are at 7:47 a.m. So it could go either way. It could go up or it could go down. So I'm a bit undecided. I don't know what's going to happen in the markets today. Typically, I think it's going to end up with a doji candle and range-bound movement. Dow Jones Industrial Average, again, it's not showing any signs of coming down. This resistance has now become support. So capitulation is far away. We are still rotating among sectors, in my opinion. Risk-on activity has brought money into tech stocks as well as genomics, but it's going to swing back again. Whether it's going to happen today or it's going to happen on Monday, I'm not sure. I cannot divine that at this point of time. It's a bit confusing. And if you look at Japanese yen is also flat, and it's being supported by the 9-day exponential moving average, but it's very far away from the 140 yen limit that we have set when the Japanese government might likely take some action. So overall, this is all looking sideways. So it's not going to feed into the US dollar index as such. And US dollar index, as we saw earlier, is range bound. Let's look at Bitcoin and crypto and gold. Bitcoin is showing some strength out here, but it's being constrained by the 9-day exponential moving average. And it has also got support from it's being constrained by the 20-day exponential moving average. And it has got support from the 9-day exponential moving average. And it's got support at 20,233, which earlier was performing the role of resistance. So this is a welcome change. Now, if we were to draw a few trend lines out here, of course, I know you guys are not interested in Bitcoin, but it's an important component to look at. If I was to draw a diagonal line of resistance out here, then we have the next resistance is going to come somewhere around 23,270, after which it's likely to come back down. MACD is bullish right now, but momentum is still below average and flat. This is the aspect, the momentum aspect is the one that makes me feel that Bitcoin may probably take its strength from Nasdaq. And if the Nasdaq goes down, Bitcoin is also likely to lose its gains. I'm still thinking that there is a lot of weakness in Bitcoin. this momentary strength might probably be given up. So that's what I'm thinking. And gold has lost a lot. And if I was to go back and look at my cup and handle theory, this was a total wash. It didn't happen. It was a false indicator. At this point of time, gold is looking rather weak, but it could have a short-term gain because we have gone to the extremes. The momentum is absolutely low, and MACD is also absolutely bearish and has gone very far away from the signal line. So there could be a little bit of dead cat bounce out here. We are seeing a pre-market gain of 0.08%. So I'm keeping my fingers crossed when it comes to gold. And let us quickly look at wheat. We were worried that wheat prices will go high. But if you can see here, we have some kind of a normalization out here, and wheat prices have come down. And this is the line of resistance that I have drawn at this point of time. MACD is a bit bullish and momentum is picking up. But wheat didn't go as high as we thought it would. And it has come back down to where it was somewhere around March of this year. So everything is looking slightly better on the commodity side. So with that said, let's go and have a look at what's happening with our genomic stocks. So here we are with our genomic watch list. And I have sorted out all these stocks into the gainers being on the top. Beam was the maximum gainer yesterday with 13.41% upside. And we have our line of resistance coming up here, 53.54, which is likely to stop it. But it has blown through the 100-day exponential moving average yesterday. So that's a very good sign. So Beam is showing a lot of strength. Let us look at news. If there is any news, there is a news out here. Veve Therapeutics, Beam Therapeutics, collaboration license agreements, shares rise. So this is the reason why the shares have gone up. The original agreement gave Veve an exclusive license for some of Beam's base editing, gene editing, and delivery technologies for treatments against 4 liver-mediated cardiovascular diseases. Under the agreement, Beam granted Veve an exclusive license for Beam's base editing technology to develop and commercialize products directed towards an additional liver-mediated cardiovascular disease target. Veve will develop and sell products targeting the gene, subject to Beam's opt-in right. After the final dosing of a patient in a phase 1 trial of a product targeting that gene, Beam has the right to opt in to share 35% of expenses of the product's development and to jointly commercialize it and share 35% of the profits. Veve shares were up 14% on Thursday afternoon, and Beam shares were up almost 13%. This is a welcome development, especially because there are some doubts about CRISPR-Cas9 causing some damage to DNA, which is likely to be carcinogenic. So with that kind of a news out there, base editing seems to be the bet out there. And Beam is the only company which was doing base editing. Now Veve is licensing. So this is a really good sign. And also with this move, I think Veve looks to be hedging its bet between CRISPR as well as base editing, CRISPR-Cas9 as well as base editing. So I think overall that's a good move, and this positive gain out here may stick with it for a while and probably move us into a consolidation at a higher level. Likewise for Veve, and we have a resistance here for Veve, which is at 20.82. MACD is bullish and momentum is almost at the overbought stage. So we might see some sideways movement, and pre-market there are no trades. So it's going to be difficult for Veve, in my opinion, to break through this red line of resistance, which is happening to be at 20.82. But if the market sentiments are very optimistic, then we might potentially see this converted into a support by the end of the day. Caribou Biosciences is up 12.76%. Let us see what is the reason. Is there any news? There is no news item out here. And we have our next resistance, which is the 50-day exponential moving average, which is sitting at 7.13. So for Caribou to go above 7.13 is going to be difficult. It's just about bullish moving away from the signal line on the MACD, whereas momentum was sharply up yesterday and it's above average right now. And pre-market, we have no trades, so we can't tell the direction. But I think the chart is looking strong for Caribou Biosciences, and it could potentially aim to move towards this 50-day exponential moving average, that is 7.15. Invite is up 11.31% as of yesterday. And when we look at the charts out here, I can see that we have the 9-day and the 20-day exponential moving average as strong support. And we have the next resistance at the 50-day exponential moving average, which is 3.80. Right now we are at 3.11 pre-market, that is down 1.27%. MACD is bullish and momentum is above average and pointing upwards. The only concern here is the pre-market trades are negative. That could indicate the jitters about what's going to happen next week. TDOC was up 8.79% yesterday, and we have this line of resistance for the previous band, which I'm going to convert into a support right now. And we are going to have support from the 50-day exponential moving average, and then by this green line, which is sitting at 35.30. Right now, we are 41.78 pre-market, which is down minus 1.04. Again, jitters about next week. PSTV pre-market is down minus 0.89. Yesterday, it gained 8.74%. And we have this line of resistance up here at 6.05, and the 50-day exponential moving average sitting at 5.74, which are going to give resistance to us. MACD is bullish, momentum is above average and pointed upwards. Everything is looking good except the pre-market action. This could probably indicate jitters about next week, as I mentioned earlier. DNA, again, the same story. And in case of DNA, we have a line of resistance out here at 3.20, which we broke through. So I'm going to convert that into a line of support. And our next line of resistance is going to be at 3.33, which is the horizontal red line out here. In pre-market, we are down 0.31% and we are at 3.23. So our next line of resistance out here is going to be the first constraint that we face at 3.33. The MACD is bullish as well as the momentum is above average and pointed upwards. The jitters are coming pre-market. Let us see if it prevails after the market opens. CRISPR Therapeutics is very strong and it was up 7.57% yesterday. Those who have got CRISPR Therapeutics, you're having a great run. Enjoy your run while it lasts. We are edging closer towards being overbought. There's still a little bit of runway for today. And MACD is absolutely bullish, but pre-market there are no trades. So a negative pre-market is worse than having no trades. So I'm still thinking that we are going to be bullish as far as CRISPR Therapeutics is considered. But we have got this diagonal line of support, which will always form the base. And we also have support from the 200-day exponential moving average. So this is a really good situation to be in. And if CRISPR Therapeutics has got to become normal in terms of its strength, then we need all the other exponential moving averages, 9, 20, and 50, and 100-day exponential moving average to move above the 200-day exponential moving average. So we are a long way away from there. So if you move back and zoom out, you can see that at one point of time, we were up here at around $220. And since then, we have dropped significantly. And we have dropped almost 67%. So we are way away from where we used to be before. And therefore, I'm thinking that there's a lot of bullishness still left in CRISPR Therapeutics, and it has got momentum to go up forward. But the news regarding the DNA breaks that are potentially carcinogenic in 5 to 8% of the test models that we discussed yesterday is likely to percolate into the consciousness of the investors, and that's likely to bring some bearishness in the future unless CRISPR and Vertex decide to release more data around their sickle cell clinical trials, where they had 70 patients in place and they had shown some promising results. So once they give that data out and remove this fear of carcinogenic effect, then I think we're going to have much more sustained bull run for CRISPR Therapeutic going forward. All said and done, it's still in a bullish phase. ARCG was up 6.36% and pre-market it's flat. And it has converted this resistance into a support at 36.91. Our next resistance is the 50-day exponential moving average sitting at 39.16. And Editas is positive, a gain of 6% as of yesterday, but it has got resistance out here at 15.37 and pre-market it's down minus 1.32%. So overall, I can say that everything indicates that we are going to have a negative bias, bearish bias for the genomic sector. Potentially, we are looking at a risk-off sentiment happening in the market, where the market is going to dump a little bit of risky stocks. It's also falling into my concept of rotation, whereby investors are making money by moving into a sector, pushing it up, and then taking profits and moving into some other sector which is down. So that's likely happening. And I still think that Dow Jones has to go below the bearish 20% for us to have capitulation and all potential for sector rotation to be wiped out, so that we can put a new base and start our bullish run. So let's see what happens next week. The results that are coming in, economic data that is coming in next week, the bank results that are coming next week, they will determine where we are going. With that said, I think I would like to bring this video to an end. I would request you to have a look at the link up here, which talks about Deep Genomics. It's a Toronto-based genomics startup company. It's got a great leadership team, and it's working on what's called as an AI workbench. It is their third release of AI workbench with increasing capabilities, and they have come up with a novel way of attacking genetic diseases, and you'd find it very interesting. More so because this company is most likely to come up with an IPO soon, potentially, and also they may come up with some cures which might be a competitor to any of the companies in our watch list. So get a head start, check out Deep Genomics. And with that said, I request you to put a like here on this video so that YouTube can promote our channel. And if you're not yet subscribed, please subscribe and help us grow this channel. And with that said, bye for now.